morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We were having a few technical difficulties this morning, folks. Apologize it. We're back in action. Good to be here on Monday morning, and we kick things off with markets in negative territory. Let's jump right into it. You got the S&Ps right now, negative by about 44 points, or 0.7% right now, trading at 56.64. Quite the acceleration from lower price. Friday, you accelerate higher. The one thing I will say, the volume. Jumping this real quick. The volume numbers, okay? Friday, pretty paltry volume. S&Ps, barely the same amount of volume we did the day prior, well off of the numbers that we did on Wednesday. You jump over to the NASDAQ 100 right now. We're negative by about 1%, right at 20,000. Look at the drop-off on that NASDAQ volume, right? Friday's acceleration, you only did about 509,000 contracts. 509,000 contracts, I mean, that's one of the lowest days in volume we've seen going back to February, right? Chopping around, one of the lowest days. Not exactly the conviction you want to end things on Friday's action. Nonetheless, we pick things up in negative territory. Dow off by about 0.6%, trading off 257 points, 41,170, and Russell off by 18. All right, good morning to everybody. Darth, I saw you in there in the Tiger's Den, man. A few technical difficulties. We got it done. And yeah, we jump into it. All right, crude. Talk about some volatility, right? We'll talk a little bit of crude this hour. Crude. We opened at $55 last night, man. We're trading at $57.30 right now. Seems like OPEC going to flood the market with oil. And the market reacting. And how about gold, man? Yeah, so much for $3,200. We're up $85 this morning. Now, this is a dynamic situation in this gold contract. Okay. You have the acceleration from the top on volume. We just completed a one-to-one A to B, C to D at about 3,500. There's your volume off the top. You're catching an acceleration today in price. And what's remarkable is you go over to the dollar. All right. And yeah, we got some dollar weakness, but nothing too crazy, right? We're just back to the lows that we were at on Friday. Check out a 15-minute on the dollar. Right back to where we were at 10 a.m. on Friday versus the dollar. 10 a.m. on Friday, gold, 32.75. So gold, remarkable strength there. Remarkable. As we're accelerating up to 33.27, and you're well above where we were on Friday, as we do have some dollar weakness, down about 537 ticks. You jump over to the 10-year right now, a little bit of volatility, but right where we were on the close of Friday, right? So what do we have? No movement on yields this morning. No movement on yields, okay? And we got the 10-year right now, sitting with a yield of about 4.33, okay, 4.33. Yeah, it's been quite a pullback. And look at that, almost 1.5 points still off where we were on Thursday. So we have higher yield at 4.33 right now. You actually have dollar weakness. Yeah, we're chopping right where we were. So yields are flat, dollar weak, gold strong, markets reacting this morning, and we come into Fed week. Wednesday, Federal Reserve meets at 2:30. Announcement at 2 p.m. Eastern time on Wednesday, May 7th. Okay, you get the announcement at 2 p.m. We get the press conference at 2:30 to follow. That press conference will be live right here on TFNN. And yeah, all expectations are that they're going to stay the course where they are right now, but nonetheless, you see higher yield creeping into this market following that hot jobs number on Friday. Yeah, and I was reading a lot about currencies this weekend. So you talk about whether you're talking about Japan, you're talking about China. And we talk a little bit of fixed income. Yeah, let's start it off with the Taiwan. And this is where, whether it's the dollar, right? But Taiwan's dollar surged as much as 5%, the biggest intraday gain in over 3 decades. Yeah, on speculation, exporters are rushing to convert their holdings of U.S. dollars to the island's currency. There's a lot going on in this market reverberating right now. Yeah, the local dollar extended Friday's rally to reach the strongest level in about 3 years. You jump over to Taiwan Semiconductor, TSM. Some volatility in the overnight session up to 183.50. We're back right now to flat. And yeah, it's a great term. Broader policy recalibration, right? And yeah, Trump's looking for a weak dollar. Look at that move, man. Whew. All right, let's jump around to some of the other currencies right now. You jump over the yen. I mean, remarkable strength. If you haven't checked out Teddy Kekstad's outstanding Tiger Forex report, folks, he's got a new issue already out this morning. We'll talk to him on this Wednesday. We will. But boy, look at that yen, right? Back from 158, we touched 140. We're pushing 143.64 this morning. Jump over to the euro US dollar. Yeah, 113.56 right now. As we got the dollar pushing 99.517. All right, let's jump around to some of the Magnificent Seven as we kick things off. You're going to have Amazon shares. Going to be down $2 to start things off. 186.70 from about 190, the close of action on Friday. Apple shares down a few dollars right now as well as the market. You get the NASDAQ 100 down 1%. You get Apple down what? A little bit more than 1%, 202.79 right now. Microsoft, the darling of last week, going to be opening down about $5 right now. They were the big winner, man. They just crushed it. Look at that. From 384 to 439. Crushed it out of the park. Meta, strong numbers as well. From 529 up to 604. Meta going to open down by about $10 this morning. You jump over to Tesla shares. Slightly in the red. From 287 to 284 this morning on Tesla. Speaking of Apple, they're going to be selling corporate bonds for the first time since 2023. And yeah, they're looking to issue investment grade debt, 4 parts. The longest portion, a 10-year note, 0.7 percentage points above treasuries. It is always interesting, right? You look at a company like that, you're getting rewarded for risk by loaning Apple money. I don't want to call it risk-free because nothing over treasuries is risk-free. The moment you get higher interest rate, there's risk associated with it. But not bad when you're getting 0.7% over that treasury mark on 10 years. Stay tuned, folks. We're coming back for the opening bell. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kekstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kekstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits. Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the markets open. You're looking at an S&P negative by about 42 points, or 0.7%, trading at 56.67. NASDAQ 100, we're off by just off 1%, off 0.8%, 20,027. We go bigger picture on a daily here. And we're well above the lows we had in the middle of March. We're now well above the April 9th acceleration, both critical areas in terms of where we were on this chart technically. But as you look at this thing, right, maybe it's a bigger consolidation area we're shaping up in. Okay? We've been in this consolidation area, folks, for 2.5 months almost. 2.5 months we've been entering this price level. Okay, which is sitting right in the middle of that range right now. Markets in the red to kick things off. Check out that gold contract as we plow higher. Gold up $82 or 2.5% right now. And we check out the dollar. 99.516 with a lot going on in the currencies right now. And speaking of, we jump to Hong Kong. Hong Kong authorities further intervened in the market, stepping up purchases of U.S. dollars to defend their foreign exchange after the city's currencies again tested the upper end of that band. Spent $1.23 billion on the currency. And yeah, they just spent, I think it was $6 billion. $9, yeah, it was like $5 or $6 billion they just spent on Friday. Yeah, this was the article I was reading this weekend, right? I had to check myself. Yeah, there it is, $6 billion. So I pull up this article this morning, and I'm like, is this the article I just read? Wait a second, they have this article dated for 6 in the morning. I said, wait a second, didn't I just read that article? No, this is the article I read this weekend, which is Hong Kong spent $6 billion on U.S. currency, its highest ever purchase of the dollar in one day. Well, they just added $1.23 billion. So you're talking about $7.5 billion Hong Kong is spending to peg their currency right now. That could be problematic as things go forward, folks. The Hong Kong dollar has gained 0.4% this quarter and touched the stronger end of that 7.75 to 7.85 per dollar trading band. Now, here's what's interesting, right? You get the dollar weakening today, okay? That would cause the Hong Kong dollar to strengthen, right? If U.S. dollar weakens in relation, the Hong Kong is going to strengthen the stronger end of allowed trading band, okay? And what happens, point being, what happens if you get a rally lower, folks? All right, maybe that was a break. It looked decisive, but boy, that would have been a nice head fake, okay? And there's nothing in the cards that says that this dollar can't break below this critical technical area of 100. And you back it up further than that, and 90's in the cards. Okay, anything's in the cards, but look at this critical area, man. This goes back all the way to March of 2015. Folks, you're talking about 10 years of technical importance in that technical area of 100. Yeah, it's a nice, it doesn't get much more round than 100, and 90's the lower boundary. And boy, you start pushing weakness like that in the dollar, And you're already seeing the surges, right? You're seeing Taiwan's dollar surging as much as 5%. You're seeing Hong Kong's dollar surging and them trying to protect it. There are things in this market that are very volatile that are still playing out. And yeah, late Monday in Taiwan, which is early Monday here, officials from Taiwan Central Bank said it would step in to the foreign exchange market if stability was threatened. And yeah, I would say that stability is threatened when you got that type of moves going in, at least from a central bank standpoint. All right, we jump around to other news this morning. Tyson out with their numbers. We pull up Tyson. TSN. You're flat right now. Flat? No, you're down 5%. Excuse me. Yeah, trading down $3. They were okay. Whatever they said in that conference call that began at 7:30. Nonetheless, Tyson shares a little bit lower. Yeah, just pushing the lower boundary of this trading range we've been in the last couple of years for Tyson. Nothing too remarkable on that chart. Check it out. Yeah, you're looking $55 maybe. Yeah, nice acceleration back November, but that was with the market as you plowed higher on their earnings as well. But Tyson chopping around down about 5% today. Boy, this one's a little bit interesting, big picture. So, T. Rowe Price, they're saying, no question, private assets are coming to 401ks. All right? Private assets will definitely come to retirement accounts. Now, this is T. Rowe Price, okay? They manage $1.6 trillion, and they're scouting partnerships with alternative investment managers. Here's the toughest part about this, folks, okay? How do you correctly price private assets? Okay, that's the worry. Now, you can already do stuff like this, for people, if you have a self-directed IRA, right? There's ways that you can gain access to private assets, folks, okay? My dad had been doing it for many times. He offers first mortgages on many of the properties that we have. You can use IRA funds for that. You get a self-directed IRA. You use your IRA funds, your 401k. You're able to invest in private assets, private investments, okay? But it's a much more guarded area because a lot of people don't understand it. They don't have the acumen for it. And the price discovery is the toughest part. Now, when I'm talking about first mortgages, that's a fairly simple transaction, right? That we're using that type of avenue for. But there's no way this computes, okay? This reminds me, okay, of Zillow trying to get into the house buying and selling business, okay? And here's why. Think about this. When Zillow tried to get into the house buying and selling business, okay, you got to go back some time to find the chart, but there it is, okay? You get up to 208. Maybe that's when they abandoned things completely in November of 2021 when you drove from 105 down to 64, and that's where we're trading at right now, almost 4 years later. The problem with their business plan was that when they tried to buy a house using their algorithm, if the house had a few problems that you might not realize through the algorithm, well, they'd get it, right? But if they tried to buy a house through the algorithm that was maybe perfect, that was underpriced, they wouldn't get it because there'd be other competitors in there. In terms of the nuances, it was the nuances of the real estate industry where you buy a product, you have a closing time, you go in, you do an inspection, you do a roof inspection, right? You have an inspection period that you can back out of. That's a lot like private placement. Okay, imagine if you go in to make a private placement bid, you have to go and you have to inspect that asset, right? You have to look at the books, you have to look at everything. Public companies, you don't have to do that because everything is already analyzed, okay? Private companies, you need the same exact deal. So what's going to happen is that the good private assets out there, you're not going to gain access to them in your 401k, folks, okay? And if you are, you're going to overpay for them. The bad assets, yeah, you'll gain access to them, okay? There's no way they're going to give you the crown jewels of private equity in your 401k. They're going to give you the chops, the trimmings of private equity. Listen, you can already use those assets for private assets, folks, for private equity. You can do it in a self-directed IRA. Making it available to people in that type of a platform, we'll finish up the conversation. But yeah, seems like it's ripe for a disaster. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's off about 50. We're going to talk about Berkshire in a moment. But yeah, just to reiterate that, right? You look at those, you already have access, okay, for astute investors, true private equity. When you start having investors that have no idea what they're talking about, think about the fees that they're going to be able to charge in here, okay? Investment grade private credit, infrastructure, real estate, private equity, and secondaries under consideration. It's going to be a fee field day. A fee field day. And because it's not transparent pricing, right? When are the private equities of Wall Street going to relinquish control of the gains and allow it to be put into a 401k? Only when all the good gains are taken out, folks. Okay, so be wary of that type of investment and the price discovery. How are you sure that you're getting into that private equity at a good price? How are you sure? You can't be sure because it's not a liquid market. It's illiquid, so price discovery is very difficult. All right, where do we go to next? Yeah, Berkshire. So what's the Buffett premium? Well, this morning it looks to be about 6.2%. So Warren Buffett stepping down at the end of the year. You trade lower to 506. They have a a trough of cash. What's it at? 350 billion potentially. But nonetheless, he's got a new CEO, and he drops it right at the end of the line. Why not? He's going to be done at the end of the year. Greg Abel is going to be running most of the companies of the conglomerate, and he is in charge of everything except insurance right now. Yeah. There's the gentleman on the right. I was reading about him this morning. But it is interesting that this guy's a deal maker, all right, but he's not a stock picker. And that's what's going to make things so interesting here in terms of how this happens, how it plays out. What are you going to do with that money? You know, you're going to talk about a big buyback. You're going to talk about dividends, not something usually in there. And this has been pretty much planned since, I think it was 2023, they talked about that Charlie Munger had let it slip at one of their meetings. Yeah, and by 2018, that's when Buffett put Abel in charge of all of Berkshire's business outside of its insurance operations and added him to the board. So 7 years ago, he's been on the board. He's been running everything except for insurance. He oversees dozens of companies. Benjamin Moore, Fruit of the Loom. Look at all these companies, right? Oriental Trading. Not familiar with See's Candies. But Buffett still runs the bulk of the company's investment portfolio and makes decisions on how to deploy capital. That's the worry there, man. And at some point, you know, there's a tremendous amount of value, but what's the premium? Right? And the premium is pretty hefty, I believe. And you're seeing 6.2, but I'd be a little wary when, you know, he can be a great manager, but he's not an investor by trade. Doesn't mean he can't come into that role. But yeah, we'll see. No, I don't. Do I have to check out See's Candies, Darth? What am I missing? What am I missing in the candy universe? Let's look it up. Oh, I got all the good Mother's Day gift ideas when they're coming. We'll give them a free plug. Yeah? See's Candies? There it is. I wonder how much Buffett bought them for. Look at those. Anyone looking for some good Mother's Day candies? There we go. We'll get it up there. All right, speaking of food, I was reading this one this morning. Make America Healthy Again. Don't agree with a lot of what Mr. Kennedy is out there doing and the half-truths that he speaks in. But boy, I do believe in no processing, okay? And that's where there's always some nuance. There's always some truth to everything going on, okay? But I was reading about this app, and I was looking at it. Yuka. It would make sense more of these are going to come about, right? Remember when nutritional labels, I'm old enough, folks, that nutritional labels, I mean, do you remember when they were like a game changer, what they would include? But it is interesting, and what this talks about here is it talks about, it's not just about calories anymore, and it shouldn't be. It's about processing, right? Ultra-processed foods. And what they break into here is they go through this app, Yuka in particular, and then they go into something as simple as healthy choice meals. Well, healthy choice, yeah, occasionally, but some of them, more than others, additives, right? How many additives are we talking about? So it's going to be interesting to see how these companies navigate it here. They talk about Conagra, okay? Conagra, probably not a big fan of this app. A lot of their products shelved with processing. You got Campbell's and Chobani in here in terms of all of these, let's see, dipotassium phosphate and other additives, right? And that's where it goes. And they give you a grade and it goes to the additives. And yeah, the founders of this app, Yuka, moved to New York in 2023. 7 million business globally is where they're at right now. But I found that interesting. It does make sense. You know, the one thing I'm always looking for, I saw a couple. It's like if you can read the ingredient list and you know what it actually means, right? There's not a list of chemicals. That's probably helpful to a certain degree. Some of them not as harmful as the internet makes them out to be, okay? But in general, yeah, processing, all right? Ultra-processed food, you better believe it, folks, okay? And listen, I love good snacks. I love good processed snacks occasionally, okay? But on a consistent basis, boy, there's nothing like, and you know, the one thing, having Tommy, okay? He loves fruit. He's gotten me back into fruit. Talking about bananas. You're talking about strawberries. You're talking about raspberries. Blueberries, okay? Delicious. He eats so much fruit, it's amazing. Why? Because it's delicious. Your body wants it. But guess what? It's expensive. It doesn't store well. It will rot within days sometimes, and that's the tough part, that we've all become accustomed to the simplicity of processed foods. But Yuka, I found myself checking that one out this weekend. All right, we talk a little bit of China. This one from the Journal. So they got a lot of different stats in here. Look at these numbers. So land sales, the numbers just dropping off. They were selling land by the billions of square feet. Guess what? The data stopped because they're selling no land whatsoever. And all these numbers are questionable, and that's why the data stopped, right? Number of people in urban areas who received unemployment insurance benefits, guess what? They're just like, we'll just stop telling the world for a couple of years. China's got some issues, man, in a big way. Quarterly GDP growth estimates, COVID was a spike. You talk about a drop-off, man. So this, in the face of the geopolitical trade war going on, land sales by value, right? How about it? All right, let's keep our eye on yields, the dollar, see what's happening as we're coming into Fed Day on Wednesday. And we're pushing the lower limit of where we were last night. Look at that. We just dropped 8 ticks from where we were at about 8 a.m. this morning. We got a little bit of higher yield right now. And we jump over to the CME FedWatch tool. Okay, so we got a meeting, next FOMC meeting. And if you're ever looking for this, and folks, this is not the holy grail, I always say. All right, it just gives you, it's one indicator. Okay, but it is interesting when you look at what the market is pricing in with swaps, and that's what this is doing. Okay, what's the likelihood that the Fed will change the Fed target rate at the upcoming FOMC meeting? We're staying where we are, folks. 97% that we're going to stay right where we are, 4.25% to 4.5%. Okay, now what's interesting is a month ago there was almost a 1 out of 3 chance that they were going to cut. Well, things have changed a lot. Okay, we'll talk about this. We'll take a look. We'll take a look at where we are. End of year, folks. Where are we end of year? Market thinks we're getting 3 to 4 cuts right now by the end of the year. It's only May. Not bad, I think, if we get that type of action. Stay tuned, folks. One more segment. Markets in the red to kick off Monday trading. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets.
TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And just taking a look at this Fed. So you're talking about, in terms of their meetings, the Fed, okay? We have, that's going to go too quick. Just going to see how many meetings exactly they have right now. Let's see. Perfect, we got it. So they got a meeting coming up on Wednesday, and then they got June, July, September, October, December. So after today, they only have 5 meetings through their December meeting. Okay, they only have 5. The fact that the market's pricing in 3 or 4, I think the market would love. Okay, the market would love. If you said the Fed's going to ease the cost of capital by 3 to 4 cuts by the end of the year, you're telling me that we're going to cut the overnight lending rate by a full percentage point, which is the 31.9 number from where we are? I think the market would love that, man. Now, here's the second part of that conversation, though. What do equity markets look like if the Fed needs to cut 4 out of the 5 next meetings after today? Let's assume we don't get a cut today, which is the market's pricing about 97%. 4 out of the 5 next meetings they're going to cut. The economic data is not lining up to be that aggressive just yet, folks. Okay, we saw the jobs number on Friday, right? We got unemployment at 4.2%. I think the market's still getting a little bit ahead of itself on yields there. We will see. All right, and we jump over. We'll finish it up. Hollywood tariff. Not sure how it works because it's not quite a physical product, and we're not going to be able to show it in America. I don't know, but nonetheless, there's a 100% tariff on it. This is the world we're living in right now. Doesn't even know how it's going to happen. Can't even really explain how a tariff works. When you make something overseas, it's not a physical good that you're selling to everybody, but I bet they'll figure out a way to tax it. I bet they'll figure out a way to tax it, and the market is thinking they may as well. So, Netflix, you drive down to 1090, you're up to 1131, you're still down by 2%. Yeah, all the studios. Disney, they catch a bit as well, though, down only 0.6%. Paramount, down about 2% as well. Apple, down 2.7%. And we finish it with Berkshire, down 5.5%. Folks, thanks so much. Stay tuned. Basil Chapman, he's coming up next. Live programming after that. Have a great Monday, everybody. We'll see you tomorrow.